Okay, did you catch that? The Fed just cut interest rates without real economic data. Yep, you heard that right. Welcome to America's newest episode of Flying Blind with the Economy, where the nation's central bank decides the future of your mortgage, car loan, and retirement fund based on vibes and PowerPoint guesses. We're talking about a quarter-point rate cut, which sounds small, but here's the kicker. It happened during a full-on government shutdown. That means no labor reports, no inflation snapshots, no real-time recession alarms, just pure guesswork and gut feelings from economists in suits. But wait, the drama doesn't stop there. The Fed board totally split. One Trump appointee wanted to slash even deeper while others slammed the brakes. And Jay Powell, the man looked like he just walked out of a fog machine, muttering about neutral rates and R-star like it's a sci-fi sequel to Inception. So what's really going on here? Is this economic caution or political chaos disguised as policy? Stick around, because this isn't just about interest rates. It's about uncertainty, division, and how America's financial steering wheel might not even be attached anymore. Let's dive in.
Always good to have you here. So what's your initial takeaway from this decision? What's the short-term and long-term impact?
Yeah, there was actually two things that happened yesterday, and it's a complicated story, so let's try and simplify. The Fed announced that they were cutting interest rates by about 1/4 percentage point. So that sounds like they're taking their foot off the brake. I think that's the better way of putting it, rather than putting the foot on the gas, because interest rates are still at a reasonably high level. That's the first thing that happened. The second thing that happened is half an hour later, Fed Chair Jay Powell came out and gave a press conference in which everyone on Wall Street had expected that the Fed's next move would be another rate cut in December. Well, Jay Powell was very clear. That's not a sure thing. In fact, it's very much up for debate. And so in some sense, what that is a rise in future expected interest rates. So overall, it's neither foot on the brake nor foot on the gas. It's really, let's try and get this machine in neutral, and then we'll coast a while until we figure out what happens next.
It was kind of interesting. It wasn't a unanimous decision. It was the Trump pick, who's a new member of this board, who said he wanted to lower even more, and yet you had another person saying he wanted to hit pause and not do anything. And you mentioned what could come now in December. So given all those dynamics, what will you be watching for moving forward?
Well, one thing, Powell, goodness gracious. Powell sounded less confident that it was a unanimous board, or even that they were all moving in the same direction, than I've ever heard him before. So yes, there's the dissent from Stephen Moran. He's the White House appointee who seems to be carrying the president's water. Don't read too much into that. But what you saw on the other side is Schmidt, who's a more serious guy, saying that he didn't want to cut rates at all. And then at the press conference, Powell really was saying people aren't quite sure what they want to do next. There's a funny concept in economics. Let's just get a little bit of a lesson in. It's called R-star. That sounds very arcane. What is R-star? It's basically, where do we want to get the interest rate for it just to be in neutral, neither foot on the brake nor on the gas? And some of the Fed board members think we're already there. And given that, that's their reluctance to cut any further. So it's not about the outlook for the economy. It's about where are we right now in terms of what a neutral interest rate would be.
And so to that point, how do these rate cuts impact, or rather reflect, the current labor market?
Yeah, so that's what's so difficult right now. Well, so much is so difficult right now. So on the one hand, we've got unemployment clearly trending up. It's a percentage point higher than it was a couple of years ago. It's been one of those things where it's moved so slowly that very few people actually noticed, but the trend now is abundantly clear. And then on the other hand, we've got inflation still at 3%, which is above the Fed's 2% target. And arguably, it's still got a little bit of, quite a bit of tariff still to come, which could push it even higher. So those two factors push in different directions. If you're worried about the labor market, you would cut rates. If you're worried about inflation, you would raise rates. And then you've got one more worry, which is we're about to steer through fog because we're in the middle of a shutdown and we don't actually know where the economy is. All of those things say, when you're driving through fog, slow down. That was an analogy Fed Chair Powell kept coming back to, and that's why I think he's looking more cautious than ever right now.
What we just watched was not your average economic update. It was a masterclass in uncertainty, delivered by experts who, frankly, looked more confused than confident. From Powell's "we're in a fog" metaphor to the internal Fed divide, this wasn't monetary policy, it was damage control dressed in academic language. The rate cut may seem like a minor tweak, but it revealed major fractures. The labor market's cooling, inflation's still high, and Washington's shutdown is choking the data pipeline. The Fed is navigating with one eye closed and no map. What's worse, the political fingerprints. A Trump-aligned board member pushing for deeper cuts while others resist entirely. It's no longer just economics, it's theater. The stakes, your wallet, your job security, and the economic health of the entire country. And then there's the neutral rate debate. Translation, no one knows where we're headed or how fast we should be going. It's unsettling. And while the Fed says it's trying to coast, the road ahead looks anything but smooth. Keep watching. The truth, it's murky, and it affects us all more than we realize.
Yeah, that analogy stood out to me too, his fog analogy. We've all been there, that's for sure. When it comes to these rate cuts, I mean, is this going to be a major victory for consumers? Is that going to help people's pocketbooks?
Well, it depends if you're a borrower or a lender. So folks who are looking to buy, maybe for a mortgage, a car loan, something like that, your rates will be a little bit lower. For folks who are on fixed incomes, who've socked money away for retirement, and that's what they wanted to live on, they're going to have a little bit less income. The boring reality is a quarter of a percentage point fundamentally changes no one's lives. And I know we've talked about this before. The most important thing for monetary policy is for it to be approximately correct. If you're in the neighborhood of the right answer, things aren't going to go too wrong. Where you get in trouble is when you start to have crazy ideas, and where if the interest rate were 1, 2, or 3 percentage points away from where it really ought to be. I feel pretty confident right now saying we're roughly in the right neighborhood. We can have an argument whether we should be a little lower or a little higher. And so, not a big deal for any individual family. The really big deal is going to be, does the US economy avoid a recession? Or on the flip side, is AI somehow going to revolutionize our lives and make everything better?
How concerned are you about the blind spots we might have because of the shutdown and data not going out, and because obviously there's been the shakeup with the entity that is supposed to be putting out, like, the labor numbers, for example? Do we even clearly have a picture of the country's economic outlook?
Look, so the good news is that we have lots and lots of different sources of data that come from lots of different domains. For instance, the Federal Reserve collects data on industrial production, and the Federal Reserve is not part of the government shutdown right now. We have lots of private sector organizations who keep track of their prices through scanners and so on, and the Fed is very plugged into that. In fact, the pandemic in some sense was a dress rehearsal for what happens when you can't trust our official economic statistics. That said, Powell said it, and everyone on Wall Street says it. These things are a partial fix for when you're doing without, but there's nothing like the real thing. And the real thing is data from the Bureau of Labor Statistics and from the government, and we're getting none of that now. So we have two threats there that you mentioned, Anna, and they're both important. The first is, during the government shutdown, we're not going to be getting any more economic data. It could be that the economy has already fallen into a recession and we don't already know it. And the second thing has been Trump's attacks on the institutions, groups like the Bureau of Labor Statistics, which I still believe the numbers, and I urge folks at home to believe the numbers, but if those attacks were to continue, things get even darker again.
All right, let's unpack what just happened, because this wasn't just a chat about interest rates. This was a high-stakes, slow-motion policy cliffhanger. A quarter-point cut sounds small, even boring, but when it's done during a full-scale government shutdown with no access to vital data, it's downright dangerous. Let's start with the elephant in the room: data blindness. The Fed is supposed to be the adult in the economic room, using hard numbers and economic signals to guide decisions that ripple across the entire global economy. But this time, no labor reports, no inflation trends, just a broken compass and a lot of, let's hope we're not in a recession already. You wouldn't drive a car blindfolded, but the Fed just decided to steer the economy through fog without a dashboard. And that fog, it's thicker than ever. Powell leaned into the metaphor hard, but behind the calm academic language is something more alarming: uncertainty layered with indecision. The Fed isn't sure where neutral is. It isn't sure what's next. And even worse, it isn't unified. Which brings us to the next big red flag: division on the board. One Trump appointee pushing for bigger cuts, another another member wanting no action at all, and Powell standing in the middle looking like he's trying to herd cats with a bar graph. That's not leadership. That's gridlock. And if you think this doesn't impact you, think again. If you're buying a house, that interest rate just changed. If you're saving for retirement, your fixed income may now yield less. If you're running a small business, your borrowing costs are in flux. This isn't abstract theory. It's dollars and cents, and it hits home. And here's the kicker. They still don't know what to do in December. Will they cut again? Pause? Reverse? Even Powell doesn't know. And he literally runs the Fed. That's the problem. When your central bank admits it's confused, investors get jittery. Markets crave clarity. And the only thing we got in this interview was a big blinking neon sign that reads, "We're not sure." Oh, and let's not forget the political undertone. Trump's past attacks on the Fed and ongoing distrust of economic institutions weren't just bluster, they left a scar. And now, with appointees still influencing policy, we're watching the central bank juggle politics and economics with sweaty palms. And in the middle of it all, you, the everyday person trying to make sense of how groceries, gas, and rent just keep getting more expensive, while the people in charge argue over decimal points. The most striking part of the conversation was when Professor Wolfer said this: "A quarter of a percentage point fundamentally changes no one's life." He's right and wrong. In isolation, sure, it's minor, but taken as a symptom of deeper dysfunction, political interference, data droughts, institutional fatigue, it tells a much bigger story. It's the story of how a system built on certainty is starting to buckle under confusion. So where do we go from here? The honest answer, cautiously. We need the government to reopen. We need real data. We need institutional trust, not infighting. And most of all, we need leadership at the Fed that can cut through the fog, not just describe it. Because if the people steering the ship are this unsure, it might be time we all paid a little more attention to where we're headed. So now, over to you. Was this a necessary course correction or a reckless guess in the dark? Are Powell and the Fed doing what they must or fumbling under pressure? Drop your thoughts in the comments. We want to hear what you think, because economic policy isn't just for Wall Street, it's for all of us. Smash that like button if you found this breakdown helpful. Subscribe for more no fluff, no spin commentary on the news that actually matters. And share this video if you think more people should understand what's really going on with the economy. Until next time, stay sharp, stay informed, and don't let the fog fool you.